So, COVID-19 threw a curveball that swacked property valuations temporarily last year. But how are prices doing today? And where should you be looking for opportunities? Joining us this morning is Tam Angel of Leechiu Property Consultants. Hi, Tam. Good morning. Thank you so much for joining us.
Hi, Mimi. Good morning.
Okay.
And thank you for having us on ANC today.
Okay, so Tam, let's start with the primary luxury condominium unit segment. Those valued at 68 million pesos and above. What's the velocity in sales that you're seeing in that segment? And could you give us a sense of just how liquid this market is at the moment?
Yeah, well, Mimi, it's not an easy task to keep a positive tone today, given the recent surge in COVID-19 cases and the IATF announcement yesterday on their efforts to control it. But looking at the condo market, there was a very clear dip in demand during the third quarter last year, given all the uncertainty and investors being in that short mode of waiting and seeing of where things will or how things will pan out. But it started picking up immediately in the fourth quarter, and this story carries on to the first couple of months this year, especially in the luxury market segment. And this validates our theory that given some certainty on recovery, investors with available liquidity, of course, will start taking positions, noting also, of course, that the higher you go on the value scale, the more investors for that particular asset class are going to be able to risk. And the lower you go on that scale, generally buyers become a little more conservative. But nevertheless, the important point we want to make is the general shape of that curve or trend is still the same, and it points to a sustained increase in demand from the dip.
Okay, just a clarification. When you said the higher you go up the value scale, the more investors risk, and the lower you go down the value scale, the more buyers become cautious. How are you saying that?
It's accessibility to funding. I think the buyers in the upper asset classes obviously have more access to funding. They may have a little bit more liquidity to risk during this time, so they have that luxury to look ahead a bit and not just be distracted by what's in front of them today.
Okay, are there more buyers or sellers for these luxury properties today, though? I mean, are we mostly dependent on new projects coming online, or are we seeing resale?
Both, actually, and that's an interesting question, because for the longest time, I think it's been a seller's market, and year on year prices keep going up, and people have always been thinking, I don't want to buy right now because prices are the highest they've ever been. And I think for a lot of these markets, and especially these core products, it's probably still the same. Most of them are the highest they've ever been, but today, the pandemic opportunity that is present is the fact that there are more inventory to choose from, right? And these luxury segments, whereas before, if you had very few options to choose from, now, even though they're roughly at the same pricing level, there's just a lot more inventory available for sale. And developers of the same products are offering, so they might not have softened their pricing, but the fact that they're offering extended payment terms, lower down payments, that is a discount in itself, and that's an opportunity in itself already.
Okay, so would you say in general, Tam, that the worst is over when it comes to the impact of COVID-19 on the property market, at least in Metro Manila and surrounding areas? I mean, I imagine the sentiment and confidence must be swinging right now because of the new spike.
That's correct. It's a tricky position to be in, but again, we want to remind everyone that real estate is a long-term position, right? You have to look at it with a much longer perspective than what's happening right in front of us today. Of course, we're all hoping that this surge is curbed by this new lockdown we have, but whether or not that will delay the recovery later, or whether that's going to happen this year or the next year or two, as long as you believe in the recovery and that it's going to happen, then it's worth looking at the opportunities present today.
Okay.
Yeah.
And Tam, I know that you've got an interesting chart about GDP and land values in BGC. I mean, you can see it's the land values is the blue line in this chart, BGC of course, staying intact last year despite a near 10% GDP contraction that the country saw, which is the green line. Do you think this is the norm or more the exception? And now we're seeing the price plateau. Could that be the lag effect?
Well, so the reason why we put BGC here is that BGC is a market indicator for us. It's a lead market indicator. It's a core product, just like the PSE has the stock index, right? But for us, it's this core products that we look at. And, real estate investments are to be viewed long-term. And opportunities are present today, and there are advantages to be had for early movers. And the more you move against the grain, in large part due to the long-term nature of the segment, the more you're able to participate in the perceived market upswing down the road. And to help us appreciate that perspective, let's go back to that chart. Let's revisit that global financial crisis in 2009. And we really like looking at this particular graph and table because when GDP slowed to 1.45% in 2009 due to the GFC, capital values in BGC remained flat, very similar to what's happening today. But the moment GDP growth recovered in the post-GFC years, BGC values grew at an astounding pace. So if an investor had come in at 2009 during the GFC itself, they would have been able to ride the growth in all of 2010, 2011, and 2012. And if you look at that table, in 2012, the growth was even as much as 50%.
Wow.
So of course, if you had taken a position in 2011, when it was already in the recovery stage, then you would have still enjoyed some growth. But it's the early investors who bravely took positions during the GFC who had a longer ride in that upswing. And investors today, during this pandemic, who are taking positions today, are hoping on the same trend, and we can fully appreciate that.
Okay, so clearly it seems that real estate assets are performing extremely well, even during crisis. But with prices holding up, how do you find new things to buy at good prices, bargains, if you will, when there's so much tailwind? Or do we just buy them at current prices and just bet that they're going to jump looking forward? Or do we have to look for these properties that have, very low valuations at this point?
Well, it really depends. A lot of real estate, especially if we're talking about residential, is an emotional purchase or it's a personal purchase. But just stepping back and looking at it from an investment point of view, then we think it's already worth looking at the opportunities right now. Of course, you can also say that maybe the price will soften further, but we don't know, right? The fact of the matter is there are more long-term news that points into a recovery than for a long-term slump. I mean, yes, today, the news on the announcement yesterday might be a temporary slowdown on our road to recovery. But ultimately, if you believe that we're able to roll out the vaccines within the year, then you already know that will have a significant impact in the positions that you take today. So, I think we should look at the opportunities right now and bet on those stimulus events.
And when you look at opportunities, where do you see the biggest opportunities? Is it in luxury, residential? Are you seeing it in data centers? Because in other countries, data centers are, just so hot right now. Warehousing, logistics, where should we be looking at for these big opportunities?
All of those you mentioned are hot commodities, yes. But I guess from personal investments point of view, we'd encourage people to look at the core markets. And that's because core markets have the characteristic of being very resilient. They're the first to go up in a market upswing, but during downturns, they're the very last to be affected, as we've noted in that GDP and BGC slide, right? And we particularly like Makati and BGC as core markets. So those are our top favorites.
Okay. And final question, Tam. The BSP meets again this Thursday. A no move is being priced in, but with interest rates expected to stay so close to the floor for some time, does this significantly help the luxury market? Does this inspire investors to purchase?
Well, the luxury market, I think, for the most part, are buying in cash. So what this will help are the segments below the luxury space, and it'll help them catch up and copy what the trend is happening in the luxury space. And that will give rise to a real mortgage market here in the country. And I think that will be exciting.
Okay, and on that exciting note, Tam, thank you so much for your insights and for joining us this morning. Have a great week ahead.
Mimi, thank you.
Thank you.